Hi there, welcome to Kneppy Invest. Thought I'd do a video on and an update on Megaport because when they did release their September quarter Appendix 4C, the share price did respond to the downside. In fact, down 31% in a few trading days. And this is really interesting because out of the last four Appendix 4Cs this company has released, three of them have been quite negative with significant share price drops. But the other one, which was the June quarter release, we saw a little bit of an upside, a little bit of positive sentiment upon the release of that quarter report. In fact, the share price rose 23%. So this company's quarter report seems to be really important when it comes to any sort of shift in sentiment. And we have seen the share price of this company significantly decrease because three of the last four quarter reports have been quite negative, starting with the December quarter report of financial year 22 that was released in January. And this is the chart from a video I did back in, would have been late April, in regards to how this company saw a fair bit of share price depreciation on the back of two fairly negative Appendix 4Cs. The December quarter, share price down 16%. In fact, share price fell from about $18.50 down to around $15. And then the share price kept on falling from the release of that quarter report all the way to the release of the March quarter report. And this was even more negative with greater share price loss, down 20% from about $13 down to, in fact, less than $10 in the next trading day. And we also saw significant volume. So that was by far the most negative quarter report this company has released. And you can just see the share price dropping from a high of $22 in November last year to $9 just after the release of that March quarter report in April. So over about a 5-month period, the share price dropped by more than 50%. Now, I won't discuss what this company actually does, but they want to be the global leading network as a service provider, and they are growing their, they're spending a lot of money, a lot of capital expenditure, so they're building the infrastructure to become, hopefully, free cash flow positive in the future. Not only free cash flow positive, but bringing in a lot of cash into the business, but they haven't quite reached that point yet. So they're still spending a lot of money. They're still operating cash flow. They're operating cash flow positive, but free cash flow negative. And that is very important that they have hit the important milestone, inflection point of being operating cash flow positive. But because they are capital intensive, they haven't become free cash flow positive. And I think that is the next, in fact, I was going to say that's the next important step. I'd say that is the most important step for this company moving forward, is to become free cash flow positive on a consistent basis. Megaport hasn't been around for long, founded in 2013 by Bevan Slattery, who is now the non-executive chairman, and they listed on the ASX in December 2015. So this company, since it's founded, has grown a lot. We'll look at the revenue growth or the receipts growth either in the next slide, probably 3 slides time from here. The current CEO is Vincent English. He's been in that role since 2017. Not a lot of skin in the game with him, only 0.6% shares owned, but Bevan Slattery has 4.5%. Now onto the market cap. So in November 2021, share price of this company was $20.60, which meant the market cap was $3.2 billion. Now the share price is $5.76. That was on the November the 7th. So if you are watching this video after November 7th, the share price might be lower or might be higher than that. But at $5.76, the market cap of this company was now less than $1 billion, $911 million. And the ticker code for this company is MP1. Now onto the Appendix 4Cs for this company. And before we have a look at the September quarter for financial year 23, the first quarter of the financial year, let's just go back to the first quarter of financial year 22. There's a couple of things I want to focus on here and just sort of compare to this current year. And that is, the first thing is receipts of customers, also the operating cash flow, and the last thing is the cash on hand at the end of the quarter. Now, receipts of customers for Megaport in the first quarter of financial year 22 was $8.4 million. If I remember correctly, that was a record quarter for this company, but this company spends a lot of money. And because they spent a lot of money, the company was actually operating cash flow negative by $6.9 million. Not only that, they also spent a lot of money on capital expenditure, $11 million in this particular quarter, $3.1 million on intellectual property, and they also spent $10.4 million on acquisitions. On the flip side, they did receive $1.7 million in the exercise of options, and they borrowed $6.5 million. So the cash outflow could have been a lot more for this company, but in saying that, they did burn through $22 million of cash in this one quarter. So the cash on hand actually fell from $136 million to $114 million. So that might not be an issue at this point in time. So 1 year ago, having $114 million of cash gave a lot of flexibility to the management if they were able to achieve free cash flow positive state in the next year or even 2 years. So let's just have a look at the most recent Appendix 4C just to see how some of these numbers can compare to last year and whether they've changed for the better or for the worse. Now, the first really interesting comparison is receipts from customers. In fact, receipts from customers fell $700,000 from last year. Now, that does not mean anything. We need to look at the trend in cash receipts to see if there's any trend. So we'll look at that, I think, in the next slide. And this is not, at this point in time, a red flag. It might be the start of a possible red flag in the near future. But at this point in time, it's not a red flag. But it's interesting enough that even though receipts were down $700,000, the company is now operating cash flow positive. So they went from being negative by over $6 million to being operating cash flow positive by $2 million. And the reason behind that is a significant decrease in their spending. So product manufacturing operating costs down $4.4 million, staff costs down $1.3 million, and administration costs down $2.6 million. So if you take into account all the decrease in spending, the company has become operating cash flow positive. But that's not the end of the story. We also have to take into account capital expenditure and also spending on intellectual property. And together, they amounted to $8.6 million. So in fact, this company was free cash flow negative by about $6 million. And that's another reason why this company increased their loans by $2.8 million. So if we look at the cash on hand at the end of this quarter, it is now down to $44.9 million. So this company has burned through a lot of cash in the past year. And if they keep going down this route, they won't, or they don't have enough cash on hand for the next financial year, and eventually they will have to do a capital raising. So I did mention in the previous slide, just because we had one quarter where cash receipts did decrease from the previous corresponding period, doesn't mean that is a significant red flag, because if we do look at the trend in receipts from the time they did list on the ASX way back in 2015, receipts have been climbing at a pretty consistent rate. Now, receipts don't climb every single quarter. There have been some quarters receipts have gone backwards. For instance, from the December quarter 2021 to the March quarter, the next quarter, receipts actually fell by $5.6 million. So even though receipts did drop by $6 million from the June quarter to this quarter is not necessarily a bad thing. But we need to see signs in the next 2 quarters that receipts are remaining in an uptrend. And then that means we need to see receipts moving towards $35 million. Now, one of the reasons why the market has punished Megaport, apart from overall negative sentiment in the tech sector, is this perception that growth is slowing for this company. And what I'm showing you in this slide is the 4th quarter growth in many of their different metrics compared to the growth in this current quarter. So if we look at the monthly recurring revenue, last year was growing, well, last quarter, so this is the June quarter we just went through, was growing at 13% quarter on quarter. Now it's down to 3%. And we've seen this similar decrease in the growth of all these metrics for every single one. For instance, revenue are down or increasing only 5% compared to 10% last quarter. Customers only increasing at 2%. Total ports only increasing at 1%. Total VXCs 5%, and so on and so on. So I think one of the reasons why the market was or punished Megaport for this particular quarter was a perception that the growth in this company is slowing down. Now let's have a look at the daily chart for this company going back 1 year ago. So it was in November last year with the share price of Megaport reached a high of about $22, and now the share price is struggling to stay above $5.50. So this has not been a good story for investors, for shareholders over the past 12 months. And in fact, I'm not sure if I discussed this in a previous Megaport video. In January, like the 1st or 2nd of January, I did listen to a podcast, and the question was raised to quite a few fund managers. The company they were more bullish about for the next financial year, and Megaport was #1 on the list. So it was came up about 3 or 4 times. So they did asked quite a few fund managers. I can't remember exactly how many, maybe 10 to 15. And Megaport was the #1 most bullish company on the ASX. So you can just see how, even though fund managers, or we are told fund managers are experts, maybe not so much, because Megaport has decreased, or the valuation of this company has decreased by about 75% over the past 12 months. And you can definitely see when this company releases their Appendix 4C, you see really big days, 3 really big down days in the past year, and 2 of those really big down days in April and also in October were coincided with really large volume, and that is actually a fairly bearish sign. When you see really big down days with those sort of candlesticks, 1-day candlesticks on really large volume, that is a bearish sign. So no wonder the share price has continued to fall from the release of their most recent Appendix 4C. The other thing I should mention is I'm actually a shareholder of this company. The reason I bought into Megaport back when they did release their June quarter results was I was being probably a little bit too impatient. I saw a good result and I thought maybe the company was turning things around. But I should have remained a little bit more patient, because that was not the end in the downtrend. It just took the share price back up towards what moving average is that? That's a 100-day moving average. And the share price really struggled to remain above that moving average, which is also a bearish sign. So I should have been a little bit more patient when it comes to this company. I just thought $8 was a good buying price based off their really positive June quarter results. So that is one mistake I made, but we should all learn from our mistakes, because as investors, we always make mistakes. There is not one single investor out there who has not made a mistake, and that includes Warren Buffett. He makes plenty of mistakes, but the main thing is we learn from our mistakes. That's all I have for this video, looking at Megaport September quarter Appendix 4C. Share price did decrease 31% on the back of this over 2 trading days, and the share price has continued to fall. So even though I'm a shareholder of this company, I should be taking my losses, because there could be way more room for this share price or value of this company to fall from here. So even though I think there might be some value, just because I might think there's some value doesn't mean the market thinks that there's any value in this company just yet. And if the market is right and growth is really slowing down for this company, Megaport might struggle to become free cash flow positive in the future. So if you have any questions, any thoughts, if you think this is the most undervalued company on the ASX, or maybe the most overvalued company on the ASX, I'd love to hear your opinion. So just leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.